going to learn today, we are going to learn the adjustments of the financial statements and the disclosures regarding financial statements. First of all, closing stock. So, closing stock adjustment it should be valued at cost or at market value, whichever is less. This we have already learned by default in accounting standard 2. Stock of raw materials should be shown in the profit and loss account, that is our income statement, and cost of materials should be calculated. Cost of material consumed. How it should be calculated? Opening stock of raw materials, then we will add the purchases, then we will add the carriage inward or any other incidental expenses. Other incidental expenses. Those should be added to this purchase or carry. Carrying over is also incidental expense. If there is any extra expenses are there, any packing expenses are there, special packing expenses for our which will be added to this. And then we will deduct the closing stock of the material. So this is how we will get the cost of material consumed. Then we will calculate the stock of work in progress and finished goods. It should be shown as changes in inventory. Opening stock. Opening stock, opening stock less closing stock, then we get the increase or decrease in the stock. The stock may be of work in progress or maybe of finished goods. Now these changes in inventory amount will be shown in the balance sheet. This will be shown in the profit and loss account, and in balance sheet we will show the stock of work in progress and the stock of raw materials under the head current assets. Subheading should be inventories, and there we will show the raw material stock, WIP stock, and finished goods stock. All three types of stock should be shown. Another adjustment which we already know is of depreciation. Now depreciation, how to calculate depreciation? Depreciation is equal to historical cost minus residual value divided by the useful life. Before doing this, consider the additions, assets sold, destroyed, assets destroyed while calculating the depreciation during the year. The residual value should not be more than 5% of the cost of the asset. Managerial remuneration should be calculated after providing depreciation. So these things should be considered while calculating the depreciation. Now how to disclose the depreciation? We will disclose the depreciation at two places, first in profit loss account and another in balance sheet. So in profit loss account under the head expenses, show the separate item as depreciation and amortization expenses. So you will calculate the depreciation on all of your fixed assets. Those may be tangible or intangible. We have given one schedule for that calculation, and accordingly we will calculate it. And in balance sheet, you will show the depreciation by deducting the depreciation from that non-current asset or that fixed asset. And again, in notes to account, you have to disclose the schedule of tangible fixed assets, and if there are intangible fixed assets, you will show that depreciation also. Now, very popular adjustment is outstanding expenses. These outstanding expenses are also called as accrued expenses, and it is personal account. Please keep in mind that it's personal account. Profit and loss account. Under profit loss account, you will show the outstanding expenses under the head other expenses, and in balance sheet, those will be shown as other current liabilities. Now, this is also a familiar adjustment. Prepaid expenses, expenditure paid in advance, or we will call it prepaid expenses. So under the head profit loss account, we will give it the heading under the heading other expenses, and we will deduct the same amount from that related account. For example, if there is prepaid rent, then we will deduct it from the rent. Balance sheet. In balance sheet, we will show it under current assets under the heading short-term loans and advances. Next one is outstanding income, or which is accrued income. Profit under profit loss account, income earned but not received will be shown, and commission receivable will be added to the commission. So for commission only, keep this in mind. It will be added. This is an example. Accrued income. Uh, Accrued interest on investment. If it is accrued interest on investment, it will be shown under the head other income, right? Not as outstanding income, it will be shown as other income. And second effect, it will be shown under the head other current assets in balance sheet. So for commission, we will add it to commission. For interest on investment, we will show as other income, and for all other income, we will show under the in profit loss account under the income earned but not yet received. And second effect will be given to balance sheet. Now income received in advance. So in this income is received but it is not earned. So it is income not due yet. Hence it is called as liability, and in profit loss account it should be deducted from the relevant account of income. If you have received income in advance, then you will deduct it from the rent account as income received in advance or rent received in advance. If it is adjusted before preparing the trial balance, only show under the head other income in profit loss account. In balance sheet, you have to show under the head current liabilities, subheading will be other current liabilities. Now dividend. So every company gives dividend whenever they are having profit at the year end and they declare the dividend. Now dividend means it includes interim dividend or final dividend. Interim dividend means the dividend which is declared between two financial statements of two annual financial statements. That dividend is called interim dividend, and final dividend is what which is declared in the annual general meeting of the company. Dividend is provided under section 235 of the Companies Act. It is profit distributed to the shareholders. So it is not an expenditure, it is called as an appropriation. What it is called? Appropriation. Now the dividend should be always declared after the provision for depreciation and not before the provision of the depreciation. It is allocated after transfer to reserves. After earning the profit, you will transfer some amount to the reserves and then only you will allocate the dividend. Dividend can be declared out of the free reserves subject to certain conditions. Separate bank account should be opened in scheduled bank for declaration of dividend and payment of the dividend. Dividend can be paid by check or warrant or any electronic mode. Now dividend on preference shares. The rate of dividend on preference shares is fixed rate. Which is called as, if you are having shares and they are called as 12% preference shares, then the rate of dividend will be fixed. That will be 12%. If it is 9% preference shares, then the rate of dividend will be 9%. This rate is recommended by the board of directors. Preference shares, if preference shares are accumulated, then the dividend also will be accumulated, and when the company is not having any profit during the next year or any subsequent year, when the company will earn the profit, then the preference dividend will be paid to the shareholders. Now preference shares will be accumulated unless mentioned in A. Cumulative preference shareholders can get dividend arrears when the company has profit. That I have already explained. Now another dividend is proportional. The Dividend declared on equity shares is called as proposed dividend, and this dividend is declared by board of directors. From 2016-17 onwards, dividend declared after balance sheet date is disclosed into the notes and not on the balance sheet. That is not on the liability side. Earlier, it was given into the liability side before 2016-17. But after that, the rule has been changed and it will be declared in the notes. It is not an appropriation now. Unless and until the dividend is paid off, then only it will be called as appropriation. Declaration of dividend itself is not an appropriation. As per revised AS4, it is not an liability also. That's why it is disclosed into the notes. Entries, when the dividend is paid, then the entries will be done in the next year. Interim dividend. This dividend is the dividend paid between two AGM. What is AGM? Annual General Meeting of the company. Interim dividend is also declared by the board of the directors, and there is no need of annual general meeting for declaration of such interim dividend. It is declared under section 123. This section is applicable for interim dividend. Now it's about the rate. The rate of the interim dividend should not be higher than average rate of dividend during immediately preceding 3 financial years. म्हणजे लक्षात घ्या, गेल्या 3 वर्षांचा जो काय ॲव्हरेज रेट तुमचा आहे त्याच्यापेक्षा अधिक रेट तुम्हाला देता येणार नाही. All provisions of final dividend are applicable to the interim dividend also. That means the interim dividend also should be declared out of free reserve subject to some conditions. Now interim dividend can be paid more than once in a financial year. Now it's about the final dividend. It is declared after final net profit is available. It is paid only once in the year. Just memorize this. It should be paid once in a year. On recommendation or declaration, there is no entry that we have already seen. Unpaid dividend is called as liability. It is shown as liability. After a particular period, if the unpaid dividend is there and interest thereon should be transferred to investor education and protection fund. So company cannot use this fund or unpaid dividend for any other expenses. It should be transferred to investor education fund. So for additional material is given here. YouTube lecture, 2 YouTube videos are given there. So now I will give some questions to you and please answer those questions.